Hi, hello everyone. Welcome to the Hangout. This week, we are going to talk about the investment fundamental number 2, about the 4 key components of investing. And in here, again, when we start, the usual disclaimer that I'm not a financial advisor, CPA, or attorney, and so I'm not providing financial advices. This is pure financial education to help you to become more educated and become a more better educated investors. So let's get started. The 4 components of investing. This is, let me zoom it in a little bit. These 4 components are the no matter what kind of investment that you do stock, real estate, like what we do just the investing is the same. Okay, and all of the investments have these 4 key components. And as an educated investor, you need to identify all these 4 components, and based on the conditions to determine should you invest in this investment, and how much do you invest, and what's the risk and the reward that you would like to get. So the 4 components are as follow. Okay, so let me make it looks a little bit nicer. So it is the asset, structure, finance, and at the last but not least is people. So it's really no matter what investment that you do, okay, you will have all these 4 components. And the assets is pretty straightforward. Is what kind of investment that you're doing. For example, you're doing stock, then the stock is the asset that you're talking about. If you're doing real estate is the asset. It's simple enough. So the question is, inside the asset, what are the things that you should be looking for? So one is the asset type, right? The type of asset, and depends on the type of asset. There are different risks associated to each asset types. So, for example, well, I'll get to the examples later on. So, so let me just go through these items quickly. So, for the assets, there are inherent risk, and there are potential rewards, and what kind of, I would say, the hassles associated with it. Well, still is I need to put you into context, so I still need to give some examples. So you, for example, stock, you invest in stock. The inherent risk of the stock is it is completely subjected to the market fluctuation. It can be volatile, and at the same time, the potential reward could be huge. And if you talk about, say, it's a bond, then maybe the inherent risk is lower and the potential reward is lower. It's a more stable investment, same as real estate. And inside real estate, there are different kinds of real estate, and they have their own inherent risk rewards. And for the hassle part is, what do they inherently have? Say, for stock is, or any paper asset that you trade publicly, basically that's not much hassle that you need to deal with. You don't, unlike real estate, you need to deal with the tenant and the kitchen, toilets, and all the rehab works, right? So those are all depends on the asset types. So besides the asset, the fundamentals is it will talk about the quality of the asset. What does it mean? Is, for example, when you buy stock, okay, for the sake of example, a particular company, then what's the quality of that company? Is it doing well? What's the financial statement? What's the position in the market in that segment? Is it a good company to invest in? The same for, say, real estate. Is it a property at the good area, right? So that's the fundamental that you need to assess on the asset to see, is it a good investment that you should do. The third thing is the market, right? So in that asset type, in that asset category, or put it this way, what is the market condition of that asset? Say your stock, is the market going up, going down, going sideways, or for real estate, is the again, is the market going up? Is there a lot of inventory, or is it a lot of demand? Is it a buyer's market or is it a seller's market? And what is the cycle? Is it the real estate cycle, for example? Is it in the which phase of that cycle it is in? And in terms of stock, it was saying what kind of trend it is going. It is you start looking at the technical analysis. Is it going down? Is it have a particular pattern, the W pattern, the M pattern, the double top, all those? And this one is about the current economy. So beyond the market, okay, just when you focus inside the market, you look at what we just talked about, the market condition and cycle. But at the same time, you also need to look at the market in the bigger picture. For example, when you talk about stock market or real estate market in United States, then what is the current economy of United States doing? Because that would definitely have an impact on the investment, on the asset that you're looking at, right? Say if it's a real estate, is it what was the job market in the area? What's the government's doing? Is the municipality is doing well? For example, if the government is not doing well, for example, back in a couple of years ago in Stockton, California, the Stockton go bankrupt, right? How does that affect the real estate market at that time? So when you look at market, besides inside the market in the microeconomy, you should also look at the a little bit more on also on the big picture. So that's the market. So the second component is the structure. It's the structure. How do you structure the investment? So there are three things that is in structure. One is the strategy. For example, you are buying. Are you buying or are you selling? And how do you mitigate the risk? Do you put a stop on your trade, or what in terms of real estate? Do you what kind of risk mitigation plan do you have? Do you have builder's control? What it means is what that is you hire in the course of the project. You hire someone to periodically go take a look at the project and see how it works. Is it on schedule, on budget, and so on. And then the third thing is about project management. It's how do you manage a project when if you buy a stock, do you check it every other day, every week, every month, or every quarter after you buy the stock, and to determine should you sell it, should you keep it? And in terms of real estate, do you check the site periodically, or how do you communicate with the contractors and so on? And how do you keep track of all the tasks being done? And those are all related to the investment, and it's not asset, it's part of the structure of the investment. So the third thing is about the finance. And what means by finance is basically comes down to three things. One is the money source, where the money is coming from. When you buy stock, is it coming from your retirement account, or is it coming from your personal, your checking savings? Right, they would have different costs. There would be say you're investing in from the retirement account. It is tax deferred or tax free, depending on what kind of account you are in. But at the same time, the choice might be limited, or that you have it self-directed, so that you can invest in anything that you want. And then another thing is about the portfolio. That what we want to point out is when you do an investment, how do that investment fit into your portfolio? Does it make your portfolio more focused, or does it make it more diversified? Right. And of course, it also talk about the net worth utilization, how much net worth you are putting into work. Right. Definitely, when you do investment, you don't want it to be zero, but at the same time, you might also not want to have the net worth utilization too high. Meaning, say you have in your bank, you have $100,000 as your net worth, and if you putting 100,000 at work, which is fine, 200, 300 maybe fine. When it gets closer to 400, 450, are you investing too much and make you more kind of less comfortable? Right. So that's also one thing that you need to think about. And about the focus and diversification, I will in the future in another hangout to get more into detail, but over here I really want to point it out is, what is your investment goal at that moment? Do you want to focus, or do you want to diversify it? Meaning, do you want to grow your net worth, or do you want to keep your net worth? I forgot who said it. I mentioned it in other hangouts, saying, I think it might be Robert Kiyosaki saying, or maybe it was Warren Buffett. It was saying you need to focus in order to grow, and you diversify it in order to keep. So when you want to keep your money safe, you diversify it. If you want to make money, if you want to grow your net worth, you should focus. One great example is starting a business. Say you are a business owner. When you start a business, do you want to focus all your energy or your money into starting your business? Or do you want to start multiple business at the same time so that you have less risk in the sense of diversifying your energy? Of course you want to focus, right? So it's a misconception that when you invest, you always think about diversify, because it really depends on what your situation is. Do you want to grow your net worth, or do you want to keep it? So that's one thing I really want to point out over here. So the last one is about the cost of money. I talk about it a little bit. It's just depends on the money source, and also what are the investment opportunity available that would be associated with it. Opportunity cost, right? Should you do this investment, or should you do another investment? And also, what's really just the cost of the money? For example, you get the money from your HELOC, and of course there's interest associated with it. And would that make sense comparing to the investment that you're making, the return that you're making, right? What's the risk associated with it? Say, for example, your HELOC is 4%, and the investment coming in is 6%, with the spread is too small, that make you uncomfortable. And of course, it depends on the investment. Is it stable or not, right? If the return is not stable, then you might have problems when you need to pay the debt, right? Because in the HELOC, the money is fixed. Then every month you have to pay the same amount, and also, well, pay more to pay back the principal, right? So that's something that you need to think about in the finance. And the fourth one, not the least one, is of course is the people. No matter what investment that you do, this basically, no matter how good the asset is, no matter how well you structure it or how safe you get your money from, this will really make or break the deal, right? Because at the end, no matter what kind of investment or business that you're dealing with people. So it's the people who you invest with has the experience, have the track record, have the right system, and on the personal level, does it have the right character, and what's your relationship with them, so that you are comfortable of putting your money into investing in that investments. Right, so that gives you a brief overview of the 4 key components, and the examples I'm going to show you. Right now we have 3 minutes left, so I would do it really quick. So one example I have is using the trustee investings. Let me like this. Okay, so the same thing over here. So for the asset types, and it could be, say for trustee investing, what could it be? It could be real estate, it could be other things. It could be one of the things that we're doing, the green demolition. And so for each of them, they have different inherent risks and rewards, right? The residential, what kind of commercial it is. And then on the fundamentals, when you're buying a house, buying real estate, people are always saying, location, location, location. What's the location of the properties? What's the condition of the property? Is it structurally sound? Is it need some work? Or if it is an income producing property, for example, commercial, an apartment or retail, does it what's the vacancy? What's the rental income? What's the basically the operating income and operating expense? What are they? Are they in good shape, or do they need work? Right? And what's the purchase price? What's the borrower's plan? Because when we talk about trustee investing and in real estate, we are lending money to the borrower who is a professional real estate investor to typically rehab the house or do construction. I mentioned it over here: green demolition, land development, vertical development, meaning building the house. So actually, I don't need it here. Building a house, and then on the project detail, what's the time, what's the budget, what are the items that they are trying to do, are those reasonable, are those make sense in the area? So those are the things that we say for us, we typically look at. And in terms of market, for real estate investments or for the trustee is we need to look at the days on market, the month of inventory, the macroeconomic, microeconomic, the cycle, the market cap rate, and so on. So these are the things that we will pay attention to see what's the asset looks like. And in terms of structure, what is the what's the strategy? Do the borrower use an entity, use an LLC to hold the property, or not, using a trust, things like that? What's the money position when we put the money in? Will it be down payment? Is better not, because trustee investings, or is what kind of lien position? Is it first position or second position, and so on? And don't worry about the terms. If you don't understand them, I will go over them in the other hangouts. And what's the return structure? Is it interest, or it might have some equity, or and what's the rate? What's the return, right? And on the risk mitigation, I'll go over again, since we are almost out of time now. I'll go over this in detail in the future, but right now, just want to show you what do we have for the basic education, right? Is there any insurance? What's the plan B if it doesn't sell, or it takes longer to sell? What's the profit margin? Is there any reserves? And do we have the money in the escrow, which we always do? Is there interest reserves? The legality, is all the paperwork done correctly? Is there any cross collateral? And what if this and that happened? What's the mitigation plan? Right. And as for the project management, what's the draw schedule, and what's the updates, right? So this is part of the structure. And on the finance side, it have the what's the borrower contribution? How much do the borrower putting in? Is there any involvement of any institutional bank? And then as for the money source for us, when we put in money in, where the money from, or our friend, other investors who are interested in investing in the deal, where do the money come from? Is it from IRA, cash, now credit card, which I hope not. Do the investor have sufficient reserves? And as I mentioned, this is kind of related to the net worth utilization, and how much are they putting in? Because definitely you don't want to put everything in one basket, because as for just investing, it's more lean on the safer side, and you definitely want to diversify it a little bit so that you are even safer. And what's the liquidity ratio? I'll go over that in the future, so don't worry too much about that. And the last thing about the people: who is the borrower, what's the experience, and then is there any team members? What are the team members? What are their experience, and so on. So this basically is a sample in the trust investing. And let me really quickly go through the sample of the paper trading, and then we will call it get rid of this. So on the asset, it's what kind of type, what kind of inherent risk, what's the fundamental, what's the sector, the company, how does it working? I already go over that when I go over the concepts. So as for the strategy, are you doing options? Are you just buy and sell? Are you doing long or short? The risk mitigation, is there any exit? How do you place the stop ahead of time, plan it ahead of time? Do you hedge against it, against your investments to make it safe? Is the proper management? I mentioned that. Do you do a check it daily, yearly, monthly, and so on? And do you have any automation in place in the platform that help you to manage this quote-unquote projects, right? And in terms of finance, again, just where the money come in, and we go over that, focus or diversified. And the last part is for the people. When you talk about people investing, we think, where's the people? Well, actually there is, because like the people you're dealing with, like the brokerage firm, is it you're using Ameritrade or E-Trade or Fidelity's? What's their track record? Which typically there's no problem. What's the cost? How much are they charging? And what's the system that they provide, the trading platform? Is it easy to use? Is it you can access it in multiple platforms? And one thing is there was how to put money in and get money out of the account, because I encountered one of my investor. they have problems with wiring to wire the money out, because for the brokerage firm, they want you to put the money in, but they don't want you to get the money out. They want you to invest in it so they can make money, right? So that particular platform, I think, is really sucks that make it getting the money out so hard for my investor to do, because of course they have good reason. They're saying, oh, it's for your security and so on, but it's just really bullshit. sorry about my language, because if your checking account, your Chase, Wells Fargo, it doesn't require you to go over additional steps. Who I said, do you think the banks care about the security, or the trading platform care, or the brokerage firm care about security at the same or more? I don't know what level, but anyway. So and besides the brokerage firm, you also, if you invest in mutual fund, the mutual fund manager, or how do they manage the mutual fund? What's their track record? What's their principle? What kind of criteria that they base their investment on? Right? If when they do that, when they're investing in choosing which company to diversify their mutual funds, what's the principles, right? So there are people involved also in public pay trading. So that's it. This 27 minutes, and is there any questions? If there's no questions, sorry about the I break my promise and make it too long, but okay. All right, seems there are no questions, and we'll see you next time.